And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, a daily market show where we look at the charts, the news, the information, the analysis, whatever it is that we feel like we can bring value to you out there, break it down and have some fun while we're doing it. We've got Noah, we've got Tyler, we've got Mark, and we've got Cody, all coaches from tackletrading.com. And we're going to be here to break down the information. On today's show, some overnight kind of volatility out of China, actually, though, although it did temper itself down, and the markets are now up here in the morning and early trading about midday. Trump came out and kind of confirmed that the trade deal is back on and nothing is really out of whack there. We'll get Mark's take on that. We got a tech breakout here, guys. I mean, really, probably the story of the day is just the strength in big tech, in the discretionary names, in the areas of the market that has just been running and running and running, and they continue to lead the market. We'll get the technicians and everybody's take on that. But let's dive right into it. By the way, if you're watching our show for the very first time, click the subscribe button, click the bell, come back and join us each and every day. Our premium product at Tackle Trading is our pro membership. And there's a lot to that. We'll discuss that throughout the show here today, a little bit at the end, but there's a link to a 15-day trial. Make sure you come and join us. Noah, you're running screens here. How you doing, sir?
Oh, I'm feeling pretty good today, Tim. I cannot complain at all. Market is breaking out on that NASDAQ.
We got to start with the NASDAQ here. Break that chart down for me if you can. Do a thorough review of it because that's a clean breakout, obviously. Momentum was, pretty strong actually from pivot to pivot on the last one. We're now clearing into a new high. Noah, what are you seeing in tech?
Well, whenever I see a chart break to a new high, that's a signal to me. It might be time to buy there. It's a nice clean break. This was a very clean line in the sand, Tim, where that you're right. After it broke above the old highs back in February, back here, got a pretty clean pop, nice momentum, and then a pretty solid retest back off the 20 we've been talking about. And then it came up, slowed down as it got back up towards that high, kind of dilly-dallied for a couple of days. And then yesterday put in a strong close right at the high. And then today we got the breakout. So nice clean break, good momentum, typical volume. So far, yesterday's volume was a touch low, but we'll keep an eye on that volume today and see where this market closes.
Marky, we talked about this on the podcast yesterday, episode 378. We just put it out last night and it's on the website. And if you're a podcast listener, go make sure you grab that here today and listen to it. But this idea of just strength in large cap tech, it's been there, obviously. We've also had the pandemic plays, the rotational nature of these groupings. Today's just further confirmation of that. Do you think this theme continues here for some time, Mark?
I mean, I think the Apple chart, if you pull up Apple real quick, if you want like evidence, and this is something I will probably refer to for the rest of my life, this little stretch on Apple, where you have basically rid the 9 EMA up for 2 months and going against a trend. I'll use this example for years and years and years about why you don't go against momentum, why you trade with momentum, why the trend is your friend, and why it's probably a fool's errand to try to guess when momentum is going to die. And that's what we've seen in a lot of the big techs. A little bit of different charts, a little bit different patterns, but there has been relentless momentum for 2 months in the big names. Coronavirus, these stocks will get bought up. Bad news, they don't get sold off very much. And it's just relentless momentum, continue. Don't try to guess when it's going to end. I mean, and that's something all of us have taught for over a decade now. Momentum trends, they're powerful. Don't be the person that says, well, I think I'm going to short here because I think this is overvalued. No, trade with the trend, trade with the signals. We don't know when it will end, right? For all we know, today's the end day. But trade with the trend, trade with those signals, and you will be a very successful trader from now till the end of time.
You know, Noah, bring up that RSI if you can. I think it's a really good point Mark makes on trend and momentum and following the trend and keeping it simple. There's no doubt about it. One of the faulty bits of logic I have heard from many, many traders, my personal opinion is they get this one wrong, that if the RSI is overbought, that means that you should avoid that chart. And I don't necessarily agree with that. I think it might actually indicate that there's just tons of strength in that. I mean, Noah, you don't want to come in at new elevated levels. I get that. You'd rather have a 50 ROI and rising, but you can't go back to mid-April and buy this thing. You got to make decisions here today. And this is a clean breakout here
Yeah.
today. I mean, how do you couple indicators being overbought with this idea that you've got trend and momentum working for you with things like the RSI, Noah?
Well, I think it's really, really important, Tim, to understand the nature of the indicator, the way it was programmed, and really the intention behind it. The RSI was developed by a guy named Wells Wilder years ago, 30 some odd years ago, 40 years ago, probably. I'm that old. But it was written for an oscillating market, chop sideways. And it has a strong tendency to get stuck on the top or the bottom when you have a really strong trending market. So if you have a strong trending market to the upside, it can stay overbought and continue to read overbought for quite some time while that trend persists. I think the real value of an RSI is it helps you avoid buying on when you're overextended in the short term. When you are at the top of the channel, I mean, you're better off buying the breakout. You're better off trying to buy the pullback into the bottom of the channel, and just avoid trying to chase things that are running on the top side of the channel. Not that it can't keep running, but it does give you a minor indication that it's overextended. But again, you have to understand that there's a flaw in the indicator. When you have strong trends, oscillators get stuck on the top band.
Mm-hmm. Yeah, no, and I think that's a very good point. In fact, we see it with all kinds of banded type indicators like RSI. I think it applies to stochastics and many others that you could fit into that theme. And if you're going to use an indicator, I mean, Tyler, how many times have you seen a new trader slap a tool on a chart, but they don't really know what it measures, and it's starting to give them false signals? I think that I've seen that mistake quite often. If you're going to use an indicator, you better know what it does, right, Ty?
Yeah, I mean, and especially because there's 3 million of them to choose from. I mean, you can quickly get confused. One of the things that I learned with trends and momentum indicators or oscillators is to really just ignore the counter trend signals. Use an RSI, use a stochastic, use a MACD. Look for entry points in an uptrend. Look for reasons to buy as opposed to divergences and such, and reasons to sell. Because just as Mark was saying, you got to trade with the trend. Don't try to pick tops. If you're looking at a stock like Apple or anything that's in a good uptrend, and you're hesitant to buy, but you're quickly jumping on every divergence or every potential overbought signal, it's the same thing as trying to pick a top. Like you should look for buy signals on the RSI to get into an uptrending stock, as opposed to anchoring on the overbought signals and trying to pick a top. You're doing the same thing that Mark told you not to do. You're just doing it with an indicator.
Mm-hmm. Yeah. Take a look at all 5 of the top stocks here. Not FANG, but FAME, I guess. They need to get Netflix out of there and put Microsoft in officially. I know that we always look at Microsoft, but Apple, Microsoft, Amazon, Google, Facebook here. Noah, give me a quick read on all of them because they're all looking amazing. I'm looking at the charts right now.
They are. Clean break on Microsoft. It's been on our watch lists as of late, along with Apple. Facebook's was on our scouting.
Let's say you're discounting Netflix. Look at that one too.
Oh, I won't.
I'm not saying
Netflix.
the chart's not clean. How big is Netflix as a company? What's the valuation of Netflix, Mark?
I don't know. I honestly don't know.
Netflix, I'll get you that information really quick.
While Mark looks that up, Apple 1.5 trillion, Microsoft 1.5 trillion, Amazon 1.3 trillion, Google almost $1 trillion here, and Facebook 9.9, by the way, billion. 990 billion, I should say, and Facebook 670 billion. So just from sheer size alone, the top 5 components are a bigger reflection of how much weight they measure in the market.
206 billion is their market cap.
Congratulations, Netflix! You are now a mega cap company.
Is that right?
If for people that don't know, okay, mega cap. Like you have large cap, mega cap. Mega cap, the official line in the sand is 200 billion. So Netflix, congratulations.
Oh, and nothing to take away from Netflix on this breakout here, Cody. It was clean. It was impressive. It was on the report from over the weekend, I believe, as well. And just a nice little W pattern there breakout. But I think what I want to do here real quick is just kind of flash through all of them and tell me, I mean, is there one area, one of these stocks, one of these mega cap companies in tech that you'd rather stock pick instead of just playing the whole thing? Go ahead and continue flashing through what you were looking at.
Well, I kind of like the Facebook myself.
Mm-hmm.
Timing on that's really nice right now.
Facebook is a great breakout.
Well,
Timing
it's
is
just that's
there.
just kind of like my immediate that one I'm not worried about it. I missed it. Like Apple popped, and it's probably going to keep running. But I feel like, oh, if you weren't already in it, you might have missed it. But
Mhm.
Facebook, on the other hand, just sitting right there, just barely poking its head up.
Mm-hmm.
Not a bad timing mechanism on a clean break right there. That's
You know,
I mean, that's just instant gratification talking. No other preference.
Mark, if you're doing it yourself, you're probably stock picking and finding your favorite candidates, whether it's momentum or naked puts or whatever it is. But couldn't you make the argument just like QQQ? Look at QQQ here. Because you can get exposure to all the strength here on just playing the ETF index. I mean, Mark, is there an argument for just saying, hey, I'm just going to take the NASDAQ 100 instead of trying to stock pick one here or one there, just play the broad strength in tech?
Well, I mean, what it would do is it would diversify you from any risk associated with any headline risk, right? Like, so let's say China came out and said, we're giving a 200% tariff on Apple phones, or the Department of Justice came out and said, we're going to blah, 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 something to Facebook. So like, that's the only thing it does from a broad scale. The patterns oftentimes are more profitable if you do the individual patterns, because like the Apple breakout on Monday, you know, that is a clean pattern individually. And so individually, if you're just trading, short-term swing trader, 2, 3, 4, 5 days, probably best for the patterns. But if you are position trading, the Qs might be a safer diversification from some of that headline risk that might pop up out of nowhere on an individual company.
Mm-hmm. You know, looking at the broad indexes, obviously tech is where the strength is. And a lot of that is just attributed to, it's almost like a safety play these days for a lot of investors. When you're seeing risk in other areas of the market, they're moving to tech because you don't have to have this clean reopening. You don't have to have this or that. You just got these clean charts. And obviously it's there. I'll tell you where there isn't strength, though, recently has been in the Russell 2000, RTY, or even IWM, either one of them you can bring up here. Tyler, when I think small caps, I first think about you because you actually built a system around small caps, trading cash flow condors and whatnot. Small caps have been lagging here, Ty. What do you attribute that to?
Well, when you look at the sector makeup, you think about small caps. It's like the anti-Netflix. Mark just talked about Netflix officially reaching the mega cap threshold. This is the opposite end of the spectrum. What caused Netflix to go to mega cap is its chart has been going gangbusters, right? Your market cap goes up as your price increases, among other things. And so if you're going to look for small caps, you think about the areas that have sucked or the areas that have been beaten down, whose market caps have shrunk. So you can look at anything that got decimated during the March massacre. So you have retail, you have casinos, you have energy, all of those guys, banks. And so recently you've seen, and you guys have talked about this, you've seen the whole rush to push into areas like airlines and those that I just mentioned flag a little bit, like they've been settling now, and the excitement is dying down a little bit. So does it mean they're going to roll over? Does it mean that it's just digesting the recent big gains? We talked about this before we started the video. It hasn't yet paid to chase these guys short because they've more just gone sideways, but it's something to watch. Honestly, for somebody who's a cash flow trader, I actually like that the rut is chilling out here just a little bit. It could use for some backing and filling, I think. But it is hard, I think, to short small caps if tech's going to keep ripping higher. Like I don't think we're going to be in an environment where NASDAQ is up almost 2% and small caps are down 2%. Like you're just not typically going to see that large of a divergence.
Well, and that because the leadership in tech is going to lift the entire market up. I mean, even if maybe there could be a reason to sell some of the distressed stocks or whatnot, if they were going to break down, it's really hard for market dynamics where tech is up 8% on a month, where you're going to see something like, you know, small caps down 8%. That's usually not going to happen, obviously. So they are holding up there, but you can't love the moving average congestion there, Mark. I mean, I instantly looked at that and I thought about you because I'm seeing the 200, the 9 and the 20 kind of pinching in there together, and then the rising 50 as well. I mean, when you see all that mess in moving averages, Mark, does it just make you neutral? Do you wait for a breakout? Wait for
No,
clarity?
I mean, moving averages for me are everything in judging momentum. If you look at Apple's chart, you have these clean uptrending moving averages, and if the SPY doesn't rally, if you go to the futures /ES, if we don't get a sustained rally here, you're going to get that on the broad market on the futures as well, where you're going to get this moving average soup where everything starts trading sideways. So like there's not momentum all over the place. There's momentum in Apple. There's momentum in some of the big tech names. There's momentum in Microsoft as the market becomes increasingly concentrated at the top. You don't see those clean momentum trends all over the place. You see them in a few places, but not everywhere.
Yeah. You know, and the few places you are seeing them, they are extraordinarily strong. The other ones, I guess you're just going to have to wait on a little bit here. Back on the ES for a minute, we did move past one news item I did want to have a discussion about, and I want to bring it back here for a second. Give me the overnight price action if you can. 5 minute, 15, don't really matter to me. Mark, in the middle of the night last night, actually the Chinese market started selling, the U.S. market started selling in the futures market while futures were open on their 24-hour-a-day cycle. And a lot of the headlines were around Navarro, you know, and the head, I think is he the negotiator, the head diplomat to China trade. What is his title, by the way? Does anybody know?
I don't know what his official title is. He's just the Chinese hawk to me.
Well, he is a hawk. There's no question about it. He had some comments which the market did not take very well at the beginning, and it looked like the market actually might be selling there in the middle of the night. Mark, explain what happened here overnight with this price action, and then how the president's tweet coming out actually kind of, you know, calmed it down a little bit, brought the markets up.
No, it dropped 600 points. You know, it wasn't a little bit of selling. It was like a free fall after he made his comments. You know, we could spend even some time talking about how fragile this market is and how little true conviction bulls actually have by this type of selling, but that's a conversation for another day. But what happened is there was a report out of Reuters that said Peter Navarro said that the trade deal was over, referring to the phase 1 trade deal that anybody that's been trading for a couple years knows about the trade war and how that's been always a bearish potential catalyst hanging over the market at any time. And so he said it was over. The markets, algos, whoever was trading at that time, you know, big, huge sell-off. Well, almost immediately, Trump comes out with a tweet that says, nope, phase 1 trade deal is still intact, which I think is very telling from a strategic point moving forward. Trump's not going to ruffle any feathers on this trade deal. He wants a strong stock market for the election. I don't think we're going to see anything negative out of Trump unless they shift campaign strategies to make China more of a focus. And then Peter Navarro came out and said, no, that's not what I meant. When I said it was over, I was referring to our trust of China. Well, when you read the quote in context, that's not what he said, but neither here nor there. So you had worries that the trade deal was over, hence increased tensions between China, but then immediately all of the administration, Trump himself came out and said, no, everything's good. And then you saw that huge, massive rebound after that, and then off to the races after that.
I think it's pretty fair to say there's not a lot of trust on each side of this aisle. I saw some comments out of China, Mark, basically calling Peter Navarro a liar and that you cannot trust what he has to say. And this is one of the lead negotiators there. I can't remember his name. I'd have to look it up. But I was reading the commentary back and forth, and I'm just thinking, this isn't good. I mean, the market continues to shrug it off, though. But that intraday action there, I think there's a couple of interesting questions. One came from Johnny in the chat. Is that algo selling when a news like that happens? When markets aren't paying attention, that's 7 o'clock at night. It's not like the U.S. markets are open. Does that just trigger an algo sell-off, do you think, Mark?
Professional traders, algos, funds, people that are paying attention at 7 o'clock on a
Tuesday,
Monday night.
Monday, yeah.
So I mean, it's not retail, right? So
Yeah, I think it's a really interesting point, because obviously it's not retail. They took it down there about 600 points, but then instantly started battling back.
yeah, and if you had a stop loss, if you were like a professional trader and like, yeah, I'm going to put a stop loss here because I want to go out to dinner with my friends. Well, that's what happened. So
It's disconcerting. I think one thing that you said a minute ago that I hadn't really spent time thinking about this morning, but it's got my head scratching here a little bit, is if the market can sell off 2% on a comment from somebody without clarification on it in the middle of a non-trading day, middle of the night, and whatnot, maybe there's not real conviction behind the buyers. I mean, it's hard to really wrap around what you're going to do with that. But we do see these disruptions. Tyler, the volatility remains at elevated levels. No, move on to the VIX here for a bit. You would think NASDAQ hitting all-time highs, Tyler, the VIX should be a lot lower than it is, but the markets are still pricing in quite a bit of risk here on the volatility index, a 30% implied volatility. When you look at historical averages, it's still quite high in that regard. Are you approaching options as a buyer, as a seller, and how do you read this volatility situation, Ty?
Yeah, so a couple of things with the VIX, as Tim mentions, 30 is high historically. I mean, 20 is like the long-term average. When you look at daily moves, 32 on the VIX is pricing in about a 2% daily move. So you essentially options are still baking in 2% daily moves, which if you think about what we've seen in the past week, it's high. In fact, if Noah, if you want to do this real quick, go to the S&P. And this is geeking out a little bit on volatility, but if you add, say, a 10-day historical volatility.
10-day historical volatility indicator?
So type in historical volatility and then just make it 10 days. This will give us a sense of how much the market's actually moving, right? Because options are all about baking in movement, and a lot of expectations should be based on what you're seeing recently. So when you look, 10-day historical volatility in the S&P, is it really 35%? You know why? Is because when we crashed last week,
that one day
really skewed this higher. So I suppose if you think that kind of thing can happen again, 10-day volatility in the market's 35%, VIX is around 30. Not unjustified if you think what happened last week could happen again, but if you take that out of it, it's a heck of a lot lower. So that's the challenge, Tim, is when you have things like last week happen. I think RUT was down like 7-8% in one day. That kind of stuff happening every once in a while, I think keeps traders a little jittery and willing to pay up a little bit more for options.
Well, dude, for me, it does. I mean, sure. I have a firm belief right now that you should be trading every day. There's opportunities every day. People that have put their head in the sand and gone on vacation for 3 months, it's time to come back, right? There's too many great charts and great opportunities. That's number one. But I also believe that in this market environment, you should maintain a pretty strong cash position. I see traders over leverage, oversized, get too many trades out there, that you get into complex situations. And then you have days like that and it can just completely disrupt the charts. Yeah. And because would anybody be surprised if on any given random day in the next 2 weeks, you woke up and the market was down 4%?
No.
No, of course not. That's the market we live in. And so you maintain elevated VIX positions and you have this underlying assumption of risk, but the markets keep chugging along, which is why the bullish side of it has been the best side of it. Bears have been beaten down and they're calling uncle now for months. I had a question in the chat. I do want to throw it at you.
No, Tim, real quick, just to play off that just real quick. The best quote I've heard in a bit was from a trader who says, I have fear of missing out on the rally and I have fear of missing out that I don't have enough cash if the market corrects. And I think that sums up a lot of traders. So
Yeah. Yeah, you want to have a cash position to be able to get into new positions and add to it, whatever your systems are to trade new opportunities as they come up. And I think every trader's got to figure out their own system, their own trading plan, stuff like that. But I love that quote, Mark, as well. On this thought here, just in the bullishness of the market, go back to Facebook for a second, Noah. I had a question in the chat. I thought it was a really good one. And where is it? But how do you pick options on this? And it goes with what we're talking. It comes from Priyanka here in the chat. Welcome, Priyanka. How do you pick options on these breakout plays? Tyler, I'm going to start with you. Do you go with theta trading with the VIX at 30?
Yeah.
Do you do spreads? I mean, you did the option report over the weekend.
Yeah. Well, and the question is timely because that was actually the core discussion on the options report. We actually focused on how do you look at the type of pattern, the volatility levels, and then make a strategic decision about maybe which strategy makes the most sense. And one of the key takeaways from the options report at Tackle this weekend was with a breakout pattern, that is one of the more bullish types of setups. And so if you rank this type of setup as more bullish than say a retracement or some other kind of bullish pattern, that causes you to want to lean a little bit more directional and have a strategy that's more delta based, kind of like a bull call spread, right? Mm-hmm. So the pattern of Facebook would influence me towards more of a delta based strategy. But then you also might look at, but what is implied volatility? Because if the IV is just sky high, maybe I'm getting paid enough for a bull put to sell some premium. And you can use the VIX to make some broad general assessments about volatility, just like we use the S&P 500 to make broad general statements about the overall market. But when you're looking at an individual stock like Facebook, you can then say, okay, well, with Facebook specifically, are we seeing really high implied volatility or not? And you're not really seeing that high of IV. So it's low enough, Tim, I think, to corroborate the more delta play, the bull call spread play. That was really the takeaway from the options report was more bullish pattern. IV's probably low enough. Bull call, I think, would have been my take on Facebook.
Mm-hmm, mm-hmm. And I know long calls right now are extremely expensive across, a lot of different companies and whatnot. I mean, if you look at the IV numbers just on the individual ones, they're really expensive. I get that. But I like delta, in this market. I know that you could easily make a case for theta. You're probably picking up great premiums and you could easily cash flow good targeted returns. I mean, Mark, you maintain your theta approach regardless, right? You just do cash flow.
I mean, listen, I'll do a delta trade if I love the setup. The device I've had for the month now is have one or two. You can make here's the thing. You don't have to go all in to make money in this market. I mean, play that breakout in Apple. Like let's say that's the only thing you did this week, you're up reasonable money after 2 days. Mm-hmm. And so you can find a way to trade, make good returns without putting all of your money to work. So I think that's a sensible approach in this market. Have a few trades out, have some delta, do some theta if you want, have some cash available in case there's a correction.
Mm-hmm. And we're going to look at some companies a little bit later in the show, which are some just incredible charts, in my opinion, when we get to the coach's corner. And traders can play them delta, theta, however they want to play them. And it really does come down to trader preference. I like the balanced approach there, Mark. And if you're out there, you're watching the show right now, let me ask you, how are you trading the market right now? Are you focused on directional plays, where you make money on the move from the stock price? Are you focused on time-based plays where you're selling options? Or are you new and you're green and you don't know how to do either one of them yet? Let us know one of those three options, one, two, or three there, and type it in the chat. Let's move through the markets here, guys, because I do want to get to stocks. There's not a lot going on in crude oil here today. Crude light real quick if you can, Noah. And Mark, you give us any updates if you have them.
Analyze it from a technical. The fundamentals are all strong. There's not a lot. It's going to take something to spook oil. I'll let the better technicians break this down for me.
I see the breakout. I see it. You can't ever argue
Yeah,
with
but
the
you're a bear. I
breakout.
want someone that isn't biased on oil.
I'm biased. Tyler, full disclosure, I just don't trust oil. Okay. So is that breakout playable, Tyler, in your opinion? I know Matt loves the breakout. It's a clean little trigger, clean
It's a
little
clean
trade.
trigger.
Yeah.
Yeah, it's got room to run. I mean, it hasn't paid yet to bet against it. So you don't have much momentum the last day or two. I mean, these are smaller kind of moving candles. I think there's more exciting breakouts elsewhere. But the other thing is it sometimes we look at the number of days that it's run up before the breakout to get a sense of how much gas is in the tank. I mean, you did have a pullback to the 20 MA last week. We've essentially gone straight up since then into the breakout. So, you know, when a stock runs from 34 to 46 bucks in a row and then breaks, you do kind of wonder if it's got as much gas. So it's not my favorite breakout pattern, but look, it's taken out resistance. You have very few red bars over the last 2 months. I don't see any reason why you'd want to pick a top here.
Yeah. Noah, what about you? You agree? You disagree?
Well, I think it's low energy breakout. Not a lot of energy behind it. It'll probably meander a little bit and maybe consolidate. I think it gets to 45.
Is that a Jeb Bush breakout?
Well, I literally thought about throwing on the Trump wig and calling it, this is the Jeb Bush of charts. But yeah, it's definitely a Jeb Bush reference now. So yeah, it's just low energy. I don't got a lot of excitement on it. And I'm with Tyler. There's better breakouts out there. I'd rather be breaking out on something in the tech sector. So, you know, here it's going to get there, but
By the way,
how patient are you?
Love Trump, hate Trump. I'm not getting into that discussion here today, but one of the most memorable political moments in my life is when he just ripped apart Jeb Bush's campaign with one comment, Mark. You're just low energy. You're low energy. And he never came back from that. I mean, Jeb Bush could not get any momentum.
He just didn't have the energy to come back, quite frankly.
That's right. Oh, poor Jeb. Anyway, crude oil here, you know, it is breaking out. You got some momentum changes that I would be concerned about, but take it as you see it. Gold, though, there's not really a debate on gold. I mean, you can look at this gold chart 8 ways from sideways. You got to like what you're seeing here in gold. And by the way, the better chart is GLD. Does anybody know why GLD looks cleaner than GC? Is that just futures pricing overnight where those ticks came?
Yes, that's exactly what it is you have, you know, those swings in the overnight that aren't reflected in the opening price of GLD.
Yeah. And if you look at the GLD chart, Tyler, this is clean. You know, and, we broke this down yesterday in the halftime show. We talk gold all the time. I think any trader who's around markets loves the idea of bullish gold here. How are you guys approaching this, Ty? Are you playing GLD? Do you have, kind of opinions about the gold market? Let's start with you, Tyler.
Yeah, I do have a GLD position. The interesting thing with gold is it's a little more sluggish moving. When you look historically, an exercise I like to do is look back and say, okay, what other breakouts would have really yielded, you know, quick, good returns? It's certainly not as clean as like the NASDAQ. So I think if you're looking at this gold breakout and your target's 175 by Friday, it's going to take a bit if it continues in the vein of what it's been doing. So there's no doubt it's bullish. This has been a little bit more steady type of ascent. So I think it requires a little more patience. And what's the other thing I was going to say? Oh, in terms of like strategy, premiums in GLD aren't that great. They're okay, but you have to lower your expectations. And so, yeah, you can sell puts, you can sell bull puts, but you're not going to get really juicy returns. So on the other hand, I don't know that I like doing like, you know, buying far out of the money calls. I think something more middle of the lane, you know, like an at the money bull call or something is how I would typically look at this.
I personally think equity is the simplest position here, but I do understand the idea of Mark does naked puts, you know, and he loves them.
Yeah.
I know there's some FOMO about missing the rallies and whatnot, but if you're comfortable picking up a few percentage a month, you know, and you're hitting your targets, nobody's ever going to argue with you on that. And Mark, you're maintaining your approach that way, right? Naked puts for gold.
It is hard because my rules on naked puts indicate that on a breakout, you go long delta. Like you don't sell naked puts because that's the coward's way to do it. And normally I'm a coward. I like being a coward, you know, sell a put on a dividend company now down near the bottom of a range. I love that kind of stuff.
Mhm.
But in my rule set, it specifically says don't be a coward, Mark, when you have a breakout. So it's either go delta or nothing for me. So
Mhm.
when you have this pattern, regardless whether it's gold, regardless whether it's MGM, whatever it is. I mean, that's a clean breakout, right?
What if you're long equity and you're considering a covered call? Tyler, you and I had this discussion when you were on the show last week about how I just don't like the idea of capping gold a little bit here. Click the trade tab here, Noah, if you can. Give me an option chain on the July contracts. I was looking at these today because the standard way to approach a cover call is going to be around that 40 delta. That's what we teach in the Tackle 25 system. You know, pretty clean, easy rule. But I wouldn't want to cap 168. It's only $2 away, right? So I guess you could go all the way down and look at like the 20 delta range, like around that 173, 174 mark, and pick up $100. Tyler, if you were long equity and you were trying to map out the potential to add a cover call position, number one, would you do it on a day where it just broke out, or would you wait? Number two is, how do you approach a delta decision on something like this?
Number one, no, I would not do it on the day it breaks out, because remember that if you just look at the short call by itself, it's a bear trade. So if you think about it, when you're selling that call, you are making your trade less bullish. Do you want to make your gold position less bullish on the day it's breaking resistance? I mean, if you've been waiting for this breakout for 3 months, why in the world would you all of a sudden turn less bullish on the day it breaks? It just doesn't make sense. So no, Tim, I think I would let the chart tell me when it's petering out. Maybe that is tomorrow. I don't know. I mean, I would just wait for like a break of a prior day's low or some signal that it's not going to go up for 6 days in a row. Number one.
Mm-hmm.
Number two, how do you go about picking which call you sell on a covered call? My overarching thought would be, don't put yourself in a position where you're going to be ticked off by making money if this goes up too much.
Mm-hmm.
In other words, sell the call where you're going to be satisfied walking away from this, having capped your profit at that level. So Tim says 168, no way. Like if this thing goes to 172, 175, he's gonna be ticked off. He sold the 168. Then sell a call at a level where you'd be okay capping the gain. Then it's a win-win. If it gets up there, you're not overly disappointed that you capped it. If it doesn't, you got the cash flow you want.
Where does the 175 level correspond to the futures market? Because that's a $10 move here, you know, $10 on 165. What is that? 6-7%, something like that.
Pretty big move.
So gold on GC, if we break from 1781, you add, try and do some math here, that'd be about 1900. Where's the 20 delta here in futures contract? That'll be easier to find it because they'll match up.
It'd be around 1900. Yeah.
Yeah. I mean, 1900 is, a reasonable T1. So if you were, because remember what a cover call is, you're giving up the rights to your underlying equity. The market can take it from you. So if you're willing to take a profit at a location, there's nothing wrong with selling a covered call there. I think that's an advanced mechanic. Obviously, a beginner's going to stick with a simple rule, but I would be lower delta marking and further out of the money personally. What about you?
Listen, since I have such fine, brilliant minds amongst me, what do you think about a 165, 185 bull call spread leap option style? It's a 20-point spread. It cost you, guess what it cost you? I'm just going to throw that out. Guess what that 20-point spread cost you?
It better be less than $8.
I say $5.
It's about 5.5,
That's
540.
cheap. That's cheap.
They are cheap. Calls right now are cheap on this.
So, I mean, what do you think?
I swear Tyler can do Black Scholes in his head.
So what do you think about a 165, 185 leap bull call spread? Gives you some upside, caps your, gives you,
reduces your theta exposure. Yeah. Yeah. I think it's a reasonable.
I like it. The key, getting the time, I think, is a key, because if you've been buying 1 month bull calls, you're ticked off after 3 months if it's not moving. So I like the idea of having time. Now,
when you say leap, are you thinking January 21s or all the way out?
No, January 21s.
21s. Yeah, the 21s. I mean, listen, I play leap options on GLD quite often over the course of my last 15 years of trading. So they're liquid. You can trade them. The spreads are reasonable
You're looking at,
for the size. Yeah.
so
Well, and whatever that is, 550. That's only like 27% of the spread on an at the money bull
no,
call
I mean, if
spread.
you have a
Tyler.
big move in gold this
Oh, yeah.
year, I
Risk
mean,
reward's great.
the risk reward is really on your side.
Yeah. Yeah.
So
Bull call spread. I love it. I love the concept. Tyler, maybe in the option theory blog coming up here, you've got one. Do you already have this week's written?
I do not. Nope.
Maybe kind of break down gold and how you might be able to play spreads to reduce theta risk and all that kind of stuff, and do some education on that. Sound
because
good?
all I care about on gold is if it goes to $2,000 or something like that, and I sit in here and I'm like, I didn't make any money on that, but I don't want to risk a lot, right? I don't know. It's what I was fiddling around with during the show here.
Like it. Yeah, I think it's a good idea.
Next market, let's take the dollar here. Cody, I'm going to bring you in on this and to break down some of these currency markets. Obviously, the dollar is now, I might have unstable internet, guys. If you lose me here for a sec, I'll let that catch up. Cody, break down currencies for me if you can.
Well, the dollar is continuing with its bearishness, but it's just slightly bearish. It's still kind of boring. It's sitting right down at that broad range support level. And as I kind of pointed out yesterday, a lot of the better applications right now in the Forex market are cross pairs that do not involve the US dollar. So a lot of the ones, the one I pointed out yesterday and the one I pointed out in the Forex report, both triggered this morning for a quick move in and out profit. So the Forex market, the US dollar is kind of boring. Not sure what's going on there. Want to see if there, is actually going to be a stimulus package, something along those lines. Are we going to add another $3 trillion to our debt? So right now the dollar, even though it's pointing bearish, it's kind of boring. It had this little drop down from that, call it a bear flag, but I really want to see it break below that actual low point of the flag to really go bearish on the US dollar. So kind of not really playing around with the US dollar right now. It's a stay away from me just because of that neutrality that's having. I'm focusing on some of the other cross pairs.
Does the index work? Does the index chart work for you yet, Noah? Thinkorswim had the issues
No,
with
it'll work for live.
Oh,
So
I see.
$ DXY.
'Cause I've got a chart on it.
Yeah, it looks like that with simulated, but like
I
on my
see.
live account right now, it looks perfectly fine.
That's interesting. Every now and then Thinkorswim has one of these funky data, quirks, and I'm not always sure why, but we did see that recently with the $DXY, which is why Noah's on the UUP, which is the US dollar index ETF. And it's great out there. Get a list of ETFs. In fact, if you're watching my show right now, just type that in the chat, build a list of ETFs. One of my favorite things to do is pick stocks. One of my second favorite things to do is to trade ETFs because they can be broad-based, they can be theme-based, and it's a way for any new trader to get exposure to ideas in the market. And, guys, that's our market skyline section. We're going to actually move on to individual companies. I think there's more interesting analysis actually in some of the individual names here today, as well as some of the charts. And we got two technicians here. Actually, we've got four technicians here today, but Noah, you are the master trader. You do a lot of the work on technical analysis stuff over at Tackle Trading. And Tyler, you are a chartered market technician. Am I getting that title right? I don't want to get somebody's title wrong, right?
You better not, homie.
CMT.
You nailed it. You nailed it.
You got it, brother. You got it. And that is definitely something to be very proud of you, to work hard to get that title. I do remember when you went through that process. Let's go through some individual companies here in just a second. But first, real quick, one thing I do want to promote here today. And Noah, can you go to tackletrading.com? And Tyler, I'm pretty transparent. I work from a checklist. I just saw in my checklist, I had a reminder. I wanted to drop something here. Highlight the blogs up there and go to the Tales of a Technician blog. Tyler, great blog, my friend. I've enjoyed it for years, by the way. I enjoyed this one as well. The Tales of a Technician blog is something that Tyler's been writing now for what, 3 or 4 years, Ty?
It's been a while. Yeah.
Yeah. You're a great writer. Why do you enjoy it so much? Because nobody's good at something unless they have some joy for it, in my personal opinion. What is it that makes you good at this? And how do you find your inspiration? Kind of talk a little bit about your blog here, Ty.
Oh, I got into writing years and years and years ago, and I didn't like English in school, but when you have a topic that you're passionate about, I just think I get a sense of satisfaction coming up with a new way of teaching something, especially when you taught something forever. It's just, I don't know, the creativity about it, feeling good about it at the end. And then just the challenge sometimes, yeah, like when you're first starting, reading the Wall Street Journal or reading Bloomberg, being like, you know what, I think I could do that. It's just, I don't know, it's personal satisfaction, Tim. And I just enjoy coming up with new ways of explaining things, just perfecting the art of really helping people grasp a concept. Instead of saying, teaching it a certain way and then being like, I don't get it, and saying, well, tough luck, buddy, you're never going to get it. See you later. I like being like, all right, well, let me try it this way, let me try it this way. And as you write about the same things again and again and again and again and again, you almost have to come up with different ways of explaining it, different ways of attacking it, or else it does get boring, right? Like it's not enjoyable to say the same thing you've said a million different times. Come up with a new way, like a new angle, a new analogy, and that kind of stuff is exciting. I enjoy that.
I'll tell you, I absolutely love your blog. And I think the thing that I really love about it the most is when you take your trade examples, win or loss, or just neutral, and you teach the lessons you learn from each trade. So it's like this trade, I learned this, and this trade, I adjusted this way. And you take those examples, and I think that's always really cool because that's actually what traders need to be doing. You need to be journaling your trades and be able to look back at it and be like, what did I learn from this? Not, oh, I lost money. Oh, I made money. But what did I learn? And that's why I really think I love about your blog is that it's always this is a trade. I was planning this. I adjusted it this way and I learned this. And I love that.
Yeah. And some people prefer webinar-based content. Some people love the audio on the podcast. I love everything. I think you learn in so many different dynamic ways. And keep up the good work, Tyler. I hear a lot of great comments from students. I know that they're very appreciative. And if you're a pro member, make sure you read the blog every week. He does 2 of them, by the way. One's called the Option Theory blog. One's called Tales of a Technician. And Tales usually comes out on Monday, Tuesday, right? Usually Mondays.
Yep. Yeah, usually Mondays is the default day.
Yeah, very good. Very good. All right, back on the markets here, guys. I want to start, with actually, let's do this. Let's do American Airlines here. I want to ask Mark a question on some of these rotational plays. More weakness in airlines today. I know it's only like a $6 billion company. It's nowhere near the top of the market, but I think it's reflective of a theme that we've been discussing. Strength in tech, but then weakness in some of these areas right now, Mark. Can bad news out of like Carnival and American drag down the distressed stocks, Mark?
I don't think so. It's a great question. I haven't thought about that. I don't think so. I mean, like you take American Airlines specifically, like once that like week of like absolute insanity passed and everything went up, right? Just you had those couple days where it was just insane. I think people look more and more at the individual companies from a big picture, right? Now, momentum can pick up at any time, but Americans' like balance sheet is terrible. So just because Americans' balance sheet is terrible and there is a real bankruptcy risk with American if we don't get back to some semblance of normal, that doesn't mean that independently Carnival or Planet Fitness is bad. So while we've seen these stocks trade together for a long period of time now, eventually, now when that occurs, I don't know, eventually they're going to start separating out. Like the bad companies that people don't believe in will drift lower. Companies that are in the distress that, people do believe in will stabilize and you'll see a separation. We haven't seen that yet. I mean, for the most part, people are trading together. So I don't think one bad company can take down I think you're eventually going to see separation. It's just a matter of when.
Look at XLI. Airlines are in that XLI sector. I mean, Ty, you see charts like this in a lot of these different areas. XLE, look at the XLE as well. Airline sector right there, the airline index. Energy, right? Utilities, we can look at distress.
So similar, Tim. Look at how, it's almost like you're not really changing charts. They've got they're synchronized really well.
Yeah. Are you guys still prepping trades here on specific names and looking for pops in these distressed companies? Because guys, one of the things in the playbook of the market recently, it's been very clear to me, is that you have these swing rotations where money will move into tech for a few days, maybe a week or so, but then eventually it comes out of that on profit taking. It doesn't disrupt the chart, but then money starts moving into other areas. Ty, are you avoiding? You still prepping? How are you approaching these types of companies?
Well, it depends on how you came into this. Like if you already had a position in Exxon or one of your energy companies, I don't think that you would have exited over the last 2 weeks of chop, right? But if you're looking at entering a new trade, a lot of these have entered just congestion zones, and I need more than 1 day's rotation into them to tell me there's something more substantial that's going on. So what I would do is I would mark the high of these consolidation zones. XLE is a good example. And I'd say, look, if you can prove to me you've got enough strength to start moving again, then I'll deploy new trades. So, like you put an alert at 42 on XLE and you make it prove itself before you start to speculate that, there's enough rotation to justify putting on new trades here.
Lewis, hold on 1 second. You got distracted here. Ty, magnitude 7.4 earthquake in Mexico just now.
Oh my. Like where in Mexico?
I'm looking it up. It reminds me of something that happened once. I was teaching a basic training. Noah, you went actually to Mexico.
I was
with
there.
Me.
Yes.
No, it's a different one. This was a different one. I remember when you were there as well, but then at a different one, I was in Mexico. I don't think you were at this one. Maybe you were. But we were in Mexico City and we're at a hotel and we're up on like the 4th or 5th floor. We got a small room, about 25 people. And all of a sudden the building starts to shake. And I had never seen anything like this in the US, but I guess, buildings, are not exactly built the same way necessarily around the world. This was a high class hotel, but everybody in the room instantly got up and left, Noah. Not even
there.
Where you were there. You remember this,
I was there.
Right?
They didn't just get up and leave. They ran.
They ran for the hills.
It's an earthquake because they knew what they were feeling.
And by the way, it was not an earthquake. It was the industrial laundry, the level below, that was just rattling the building real bad. But everybody hit the doors and went outside. I don't know where in Mexico it is.
It was in Oaxaca. So not out, kind of over on the coast.
Hopefully not too
7.4 magnitude, southern Mexico. Close to, down by Guatemala. So
yeah. I'll have to check that news out later. Obviously, maybe not market implications here, but definitely human implications. We'll look into that. Thanks for letting us know, Lewis. Hopefully everybody's down there safe. And we got students in Mexico, Noah. I know you've mentored several of them. Right?
Yeah, absolutely. Yeah, absolutely. So I hope they're all safe. They're all kind of from the Mexico City and a little bit further north up towards, what is it? Can't even think of the name of the other place we went.
Monterrey.
That's right.
Monterrey, one of the really most fascinating cities I ever visited while I was traveling, doing those basic trainings for sure. Mexico City as well. I really loved walking around town. No, I remember when we went and saw the art. What's that guy's name? You love him. The artist with the sculptures, that one sculpture park we went into.
Oh yeah, Salvador Dali.
Salvador Dali. Yeah. That's right. All right, memories, my friends. Back on markets here for just a minute. Let's move on next to Amazon if we can. We talked about the strength in big tech. I expect you're going to hear a lot of stories like this over the next 10 years. Amazon is pledging $2 billion to climate change, and for any companies that can innovate or and they call it decarbonize the actual environment and whatnot. Government solutions are obviously there, but one thing that we've seen in the last 3 months, maybe more than I remember in my career as a trader, is corporate companies and corporations coming in and doing things to get involved in politics, the environment, social justice. And I really do believe this is a trending theme that is going to just continue on environmental and social and governance issues. Mark, when you hear stories like this around a company like Amazon, does it give you more resolve that good signals should be bought up? Is it a no news story for you, just kind of noise? Do you have any kind of read on this?
No, I mean, listen, I love the environment. You know, I've said a few times on this show that as a Republican, I wish Republicans would take a bigger stance on the environment because I think it would broaden our base. So I love the story, and I know a lot of individuals, they put their money in companies that they believe in this, and it flows that. So that's hard to quantify, though, as far as a specific, like what it means. You know, one thing I do know in looking at this chart is that it's not as pretty as Apple, but it's held its 20-day moving average the whole way up. I mean, it's sometimes there's been some battles there, but it's held it all the way up.
Well, and not so subtly run to 27.75 here. I remember when they marked a $3,000 price target at one of the analyst firms, and it's like, well, that might take some time. Maybe not here, Tyler. The
In
strength.
this market,
Yeah. It's like
Oh, it's insane.
unbelievable. Next one, Starbucks, if we can, and then Beyond Meat actually is where the analysis is going to come in. You know, I am a Beyond Meat believer. I know that that's not exactly a consistent opinion by everybody, but one of the things you got to admit about Beyond Meat's analysis is that it does have competition. Starbucks actually in Canada and China, they struck a deal with Beyond Meat recently, several months ago, I believe, to provide breakfast sandwiches with their product. But today in the US, they actually struck a deal with their competition in Impossible Foods. Beyond Meat here real quick. By the way, the chart on Starbucks is not great. Neutral at best, right, Ty?
Oh yeah, it's a mess. It's a mess. It's a pass is what it is.
There's nothing you would do there. I mean, even if you're looking for a dividend mark, I can think of a bunch of companies I'd prefer over a Starbucks here with, the reopening risks and whatnot.
I mean, for Starbucks, you know, from a trading point of view, Tyler summed it up. It's a mess. You know, this would be a, investor valuation determined. I mean, it's an ugly chart. It is an ugly chart.
Going to Beyond Meat, though, I want to get your technical read. I know that, the news is what brought it down here. Is that kind of a failed breakout in here, guys? No, zoom in on that and give me a read, because I know it was trying to pop above there, trying to test that resistance. I still see the uptrend. We're on the rising 9 EMA. Is there any concern in there, Tyler, or you first, Noah, from the volatility from the chart perspective?
I don't know if that's, it's a breakout interrupted, we'll call it. I don't know about a failed breakout yet. It hasn't violated the 9-period moving average, and it still could put in a higher low and break out. But it definitely did not break through on that first attempt. So it looks like it's tested it a couple times. Those upper shadows on those last 3 candles up there kind of tell me that it tested, and did not break out. So I wouldn't call it a failed breakout yet, but unless it, finds a higher low and then reattempts it, I wouldn't buy into it until then.
Well, and here's the difference, and trader preference is important on this. The difference between conservative confirmation, where, Tyler, you wait till the end of the day. A lot of technicians say it's not a breakout till it closes above the breakout resistance, right? Where more aggressive technicians might play the intraday breaks when they start moving. Here's an example where those aggressive technicians would have been beat down here for a few days. Tyler, what's your read on that? Do you have to get a close to call it an official breakout? Are you more conservative on that, or are you willing to go down to the intraday charts?
I'm willing to go intraday. I don't, by the way, I don't know that Beyond Meat had the best breakout setup to begin with. And so I think that a lot of your heartache can be avoided by maybe just the quality of the setup. I don't know that that's a breakout I would have taken on Beyond Meat. Maybe I'm saying that with confidence because I know it didn't work. but that would be part of it for me. When I'm trading a breakout, I buy it intraday when it breaks resistance, simply because it's you pick your poison on that. Like, you could say wait for it to close above resistance. That's fine. Your pro is you get more confirmation. Your con is, what if it's up 5% by the end of the day? You get a worse price, right? I'd rather have less confirmation and a better price. That's the trade-off I'm more comfortable with. So, that's the way I take it.
Makes perfect sense to me. 2 or 3 more here on the news. Then we're going to get down to chart analysis. Spotify, a quick one. I mean, Marky, you ever feel dumb when you take profit?
I feel dumb all the time. I just never express it.
Yeah. I don't know. We might have lost Noah here. Might have just frozen or not. But
I might have frozen.
Give me Spotify.
Spotify spot.
Tyler, I had a trade on Spotify. I exited the trade. This could be an example, Cody, of the blog. And obviously not all trades are profitable. I'm playing Delta more recently, so your win-loss ratios are going to be lower. But I got lucky on this, I felt. When they had the news last week, they signed Kim Kardashian to a podcast. Spotify jumped to 220. And I was talking to Mark, and I'm like, well, that's my target. I'm just going to take profit. Here we are 3 days later, it's at 250. More news, by the way. They're going to be streaming through Comcast video systems, so you can get the audio and the video podcast from Spotify right on your television, like a TV network, Mark. That's actually really big news, in my personal opinion. This company has been blowing the doors off. But don't you feel dumb sometimes, Ty, when you take something off a few days later and you're like, holy cow, I could have made an extra, gajillion dollars on that?
Oh, sure. Yeah, I mean, you are dumb, Tim. I have a side question though. Isn't it interesting? I don't know that we've heard much from Spotify in forever. Isn't it interesting how there's a barrage of things happening at the same time? Like, did they plan that, or did all of this just spontaneously happen at once? It's just interesting how every single week there's something, and it's like, dude, if you had this much going on, why didn't you say it last year? I think it's interesting.
I mean, it could be a corporate strategy, because this is big news within a short period of time. The Joe Rogan signing, Kim Kardashian signing. They signed with DC Comics, Tyler, to create, like kid versions of audio podcast, I think, stuff like that. Now this deal with Comcast, which I think is a big deal.
Yeah.
I mean, maybe the board of directors, the leadership at Spotify is like, we're going to drop this day after day after day after day and create this buzz around our company. Maybe. I mean, it would make more sense than that it's just all random, obviously. I'm sure they're doing some planning. Good question. That's a good thought.
Yeah.
Mark, do you even have any interest in this company now that it's gone parabolic like this?
Listen, as a Spotify user, I love their product. Like, I think their product is amazing. And, that's always the first step. I mean, it's always comes down to finding the right setup, right? Like, if you wanted to play off support lows, you got that in March throughout that. If you wanted to play the breakout, you got that in April. If you wanted to play the second breakout like you did, you got that a few days ago. It's all about setups, right? It's all about setups. I mean, this kind of run up doesn't produce the greatest setups. And so you're kind of trading blind. But like, this thing's pretty technically well behaved. If you look back over the last year of the chart, clear ranges, support and resistance matter, breakouts trade well. So it's a really well technically behaved chart. So yeah, just give me a setup. I'll trade it because I love how technically cohesive this company has been from a charting standpoint.
Sure. It's staying on my watch list. There's no question about it. It is definitely one of my favorite companies to pay attention to and trade when you do get proper setups. Great news recently as well. Next one here, DraftKings. We talked gambling on the podcast yesterday, Mark, and we're having a discussion about it. I find this to be interesting commentary. A couple of things around DraftKings that I think are positives. Number one, baseball's back. They're going to be playing, Noah. They signed a deal to do a shortened season, 60 games in Major League Baseball, something like that. They don't have a date or how they're going to do it, but they basically announced we're moving forward. We're going to play ball, and who doesn't love a ball game and a hot dog and a beer in the summertime, right? No doubt about that. So that will be good for DraftKings, gambling interest. But Mark, the news yesterday that California could not strike some legislation or agreement with the tribes, I believe there, was concerning for DraftKings. It was down on the news. Oppenheimer, who does coverage on DraftKings, came out and said, listen, that's not important. We didn't expect DraftKings to make any money in California for like 3 or 4 years anyway. And so they actually reiterated the strength they saw in this company. I'm still very much interested in the stock. The candle yesterday throws it off. I know I got a little bit of a doji candle coming back up here, up like 2%, 3%. Noah, interest here. I mean, does that chart get disrupted because of yesterday's volatility? Do you still have interest in this company if it breaks out? How do you read that chart?
Well, yesterday's big bearish engulfing candlestick not only traded and closed below previous candle lows, it got down below that 9 and 20 period moving average, which to me, that definitely breaks the pattern. It would have to establish a higher low and get back up there and retest those highs for me to consider it a breakout. And in the meantime, it would just be like, okay, what I thought was going to break out apparently is not with that little pattern interruption, and I'll wait and I'll just be patient with it.
Mm-hmm. You can get the 30 strike 24-day contract. You can get 70 cents on this thing, Mark. There's plenty of liquidity. They're tight options. The implied volatility on DraftKings is 102%. Mark, are you changing your approach to DKNG? I mean, it's not a clean chart at this point right now. Do you have any different approach now?
Dude, old Dave Loudmouth over at Barstool Sports convinced me on Penn. He was on Jim Cramer last night. Can't stand the guy, really can't, probably because it reminds me too much of myself and his obnoxiousness. But like, I don't know. I like the Penn play on gaming with the casino backdrop. I read it. An analyst gave a whole thing on Penn, read it. I like a pullback in Penn better than DraftKings right now. I like the space.
Give me
Love
the Penn
space.
chart, Noah. PENN.
PENN.
So full disclosure, I do have a naked put expiring in July on Penn. So, yeah, so I like the space. I mean, I listen, when you're trying to look out 5, 10, 15, 20 years, it's hard, right? You got to have these big macro assumptions and guesses. But man, I know my gamblers, having been around them the whole life. Gambling's not going away. It's going to be a long road for states to legalize. It's going to be a lot of opposition along the way. But I like the space. I like gambling. I love gambling. But I like it from an investing point of view, especially if you get pullbacks to lower levels. So there was a Tim, I can't remember his name. He's one of the fast money guys yesterday. And I really like the way he thinks. And he's really, they were talking about DraftKings. And he's really, really conservative. He's the kind of guy that says, hey, buy Pfizer on the pullback kind of guy. So I really relate to him. He's all about valuation, all about fundamentals. And he was talking about DraftKings, and he was saying something along the lines of like, I love this space long-term, hate the valuation like on DraftKings, but this might be one of those plug your nose and buy situations. And that's something. He's not one to make these outlining. He's like, I hate it, but I might have to plug my nose at some point. Now, plugging your nose through a naked put can give you a little bit better valuation while generating some cash if you want to be more conservative. It's always tough when you're making these big long-term plays and bets. But so what were you saying? There was 100% implied volatility for 90 cents on what options?
Dude, DKNG, it's just, I mean, I'm sure you can get a lot of premium on Penn too, but some of these companies, I mean, you look at DKNG here, and even Tyler, we were in the scouting report meeting, and you're like, give me that for options, because the options actually, even though it was an IPO just 2 months ago, are very liquid on DraftKings, and you can get in there and you can play them. I mean, Tyler, on situations like this, and I completely hear what you're saying about Penn v DraftKings, Mark, as a discussion, but I think you can like them both personally. I really do think you can like them both, and I love that what your analysis there was on liking the space.
No, I mean, I do. I love the space. Gambling's not going away. It all comes down to how do you play it, and that's maybe one of the most difficult things as an investor. Do you just buy now in fear of it like running? Do you patiently try to wait for a pullback or sell naked puts to get a better price? Every individual's going to make their own call on that. How do you, when you have something that you really believe in long-term, guys, from a long-term point of view, how do you approach it from entering? Like, what do each of you do?
I'll start. I think the key, whether you sell naked puts, whether you scale in, the key is the sizing. If you screw that up, you're toast. I mean, Penn went from 40 to 3 back to 40. Like if you can't handle the volatility, it doesn't matter. You can screw it up with the naked put. You can screw it up buying now. I think in either case, you get the sizing right, and that's the key.
Mm-hmm. Yeah, and if you've identified the investment sizing that you're willing to kind of end up at, Marky, I'm a believer in starting with a smaller position and adding to it on strength. I actually don't personally like dollar costing on losses. I know that other traders do, other investors do. It's a very famous thing. But let's say that I want to do 2% on Penn. Like we had that discussion on the podcast yesterday. Give me your 10-day or 10-year home run plays, right? And maybe if that would be one of the picks, and just hypothetical. I might start with 1%, knowing that I'm willing to come in with another percent if it starts running and shows me just a clear breakout on the weekly or something. So that's usually the way I approach it personally. If I've identified how much I'm willing to play, so I'll start with a smaller position, then add to it on gains.
How about you, Noah? You got mute. You're on mute. You're on mute.
Sorry about the mute. I had my toddler run in here for a minute. I like scaling on those. You know, it's not a bad way to go. And, you know, take it to an intraday if I'm looking for an extra confirmation on it to try to time entry a little bit better.
Mm-hmm. Mm-hmm. Yeah. Great question. Great question. Because everybody's got to have their position sizing, and sizing's right. No, and and Tyler, I didn't notice that it went all the way down to 3. You know, if you were a long-term holder of that, you were sitting at 40 and then you saw 95% of it go away.
Oh yeah. So
That would-
impossible to hold through that.
That would have tested you. That would have tested anybody's resolve. There's no question about it. All right, guys, that's it for stocks in the news here today. You know, there's not a lot of companies in terms of earnings here this week. We're light. We do have Nike later in the week, but we're going to transition into our last section. And I reserved a little bit more time for this because I got my technicians here and I want to break it down. It's going to be our corner. A couple things here, Noah, real quick, as we're discussing. Number one, go to tradingjustice.com. I want to kind of, pitch the podcast here for a second. We dropped that last night, and I enjoyed the conversation with Mark and Matt, discussing market themes that we're in right now. And by the way, if you listen to the podcast out there, thank you. Appreciate it. We hope that you do. If you don't, you can find it on any podcasting app, Trading Justice, and they're all free. Tyler, you wrote the newsletter this month on the podcast, and there's the episode, obviously, to listen to that. But highlight that newsletter for a second, Ty, because I've got last month's writer and next month's writer here on the show with me today.
Yeah.
Tyler, again, you're going to be talking about this art of charting tomorrow in our Wednesday night webinar here on YouTube. Kind of explain what you're going to be going through tomorrow night.
Yeah. So charting can be challenging just because there's so much information. And so it helps if you have like a pecking order or a hierarchy or just an organized way to break down a chart from A to Z. And so what I wanted to do is just elaborate on that concept and walk somebody through, hey, if you're just getting started with charting, number one, what are kind of the key principles you need to know? Number two, how do you chronologically from what's most important to what's least important break down a chart? And so, Tim, we go through that. I kind of go through my hierarchy, and then I end with a couple examples so they can see it in action. And I think you come away with a really good model of how to be a chart reader, from A to Z, and have your own system of breaking down the price action instead of just jumping around.
Mm-hmm. Yeah, I agree. I really thoroughly enjoyed it. I know, Mark, next month you're going to be doing an update on like the bull, bear, and neutral themes in the market and kind of exploring that. You had a great newsletter from a few months ago. You wrote on that. I'm looking forward to that as well. You guys do a great job with the Trading Justice newsletter, and it's a free newsletter. If you're interested in trading content, trading education, it's an easy one. Just go grab it from tradingjustice.com. Make sure you subscribe to it as well. Back on the markets here for Coach's Corner. Coach's Corner is that last segment we always do in our halftime report where basically we go around the room and we give the mic around. Ty, we throw it around. We say, Tyler, you're up. Mark, you're up. Noah, you're up. It's my favorite thing we do in the show because it's that last kind of thing where we get ideas, we get context, we kind of get some actionable things that we might be able to go out and start looking at for the rest of the day. If you're watching our show right now and you've not done it yet, give me a thumbs up, by the way. I'm looking at the analytics and, it's one of those things where if I've got 130 live, I want at least half of the people to give me that thumbs up. We're at 50. So if 15 people could click thumbs up, I would greatly appreciate that. And let's get those analytics up there. Tyler, you're our guest here today. You're first, my friend. What's on your mind? What stocks are you watching? Coach's Corner time.
So we talked about Facebook. Another one that's getting close to breakout is Google. I don't know that we spent any time on that. GOOGL. And I like the setup, Tim. I think it returns to 1530, which is about $50 away. So there's a decent little area between the current resistance and its record high there at 1530. So it's also one that hasn't run a lot. So if you think it plays catch up with its fellow tech brethren, I think you got a nice push up to 1530. So that's a breakout setup that I'm watching. A second one, and I don't know how many you do, but I'll just throw out a couple here. Second one that's actually perking up today is First Solar. FSLR, it's up 4% on the day. I think we had this in our report last, maybe 2 weeks ago on that retracement to the 20 MA. But I like how it's getting ready to clear the last week of congestion, and could be a little swing trade pushing up towards 55. I like it. Pretty healthy price action there, Tim. It's been clean.
I like that chart a lot. I don't know if I would target 55, by the way, on that first pivot. I know there's history there. I get why somebody might not back down, but I might be looking at that second level up there, about that 58 or 60, wherever that pivot is from back in February. You know, when a chart like that holds the moving averages mark and it's showing that resolve, it's playing defense at 50 at a support zone. First Solar, interesting chart there as well. Mark, how do you read those MAs? Anytime I have a question about MAs, I always think about you first.
All right, pull up the weekly because I love the daily setup. Oh my gosh, I was like, I'm gonna make this trade, because I love the daily setup at all. But I go through my process, and there's that 50 weekly, and we noticed that the last time, I love stocks personalities. The last time in early 19, when we were battling that 50 MA in a pretty similar pattern, maybe, we did not with quite the drop we had in March. We saw that it came up, tested, held, and then broke out. So, I mean, there's something here, right? I love this. You got rising daily moving averages. You got really beautiful pattern. You've had we saw how it got slapped down the last time. It's like really close. I really like the development of this pattern though. It's just where would I signal? And
right. So you just want more confirmation that we're getting above these levels.
If this were to break on Friday and give me a close just above that, I'd be in. I really like that reversal pattern there.
Well, if you look at that period from 19, Mark, when it finally did get through that congestion, we ran from the low 50.
We had a big, nice swing trade, right?
Yeah, the
really
high
nice
60s.
swing trade.
Yeah. That was definitely great. A couple real great ones there, Ty. No question about it.
Can I mention one more, Tim?
Yeah, man.
Put Nicola up in KLA.
Uh-oh.
What I want to know your guys' thoughts on this little breakout here. You have to go back to the daily. It's insane, obviously. They're pre-revenue. Maybe you guys have talked about them, but what about this breakout coming up here?
It's clean. The momentum is there. This is one of those hype train stocks. Obviously, we've talked about the fundamentals, the concerns about no revenue and all that kind of stuff, but let's table that for a minute, because investors who invest in Nicola, they don't care about the fact they're not making money yet. They're doing it because they believe in the vision long-term and all that kind of stuff. This is the classic home run type of, I believe, like Simon Sinek would say. Trading wise, Tyler, I love it. I think it's so amazing to me, the market we live in. Because I remember when we all started, guys, I mean, you'd have an IPO company come out. You couldn't trade options on a company like that for a long time. Nicola's options are already liquid. You could play the equity, by the way. If you look at the trade tab here, Noah, here's a stock with this is on my list, Tyler. I'm watching for signals. I like the signal here as well. You're talking about 190% implied volatility, and the bid and the ask on the stock market is 71.25 by 71.31. You only have a 6-cent bid-ask spread on a company this wild.
Yeah.
It's a wonderful time to be alive and be a trader. Market liquidity, even in crazy times.
The volatility so much when it dies down eventually.
Well, and let's say that you don't want to play this delta. I like the delta side of it, Ty. But let's say that you're looking at it more like the way Mark does. Open up the 24-day contract there, Noah. Or 31, that's fine too. You can be as low delta as you want and still pick up premium on the put side. I'm talking like 5 delta. I bet you could go all the way on the right side there, Noah, and go deeper out of the money. Really low deltas, 10 delta, 5 delta in there.
You can get 50 cents for a 2 delta.
Dude, I mean, there's a bid at the 25 strike for $1.25.
Yeah.
It's crazy how much money is in some of these wild names. So I would understand somebody's caution mark if they say, listen, it's a flyer, it's a new company. I don't want to trade it yet because I don't know if I can trust this move on a delta based play. But if you know how to play theta, Tyler, and you have a balanced approach to markets, there's other ways you can play it. I love the stock. I think there's opportunity there. There's obvious risk here. You would have to put this in your aggressive speculation watch list. There's no question about that. No, what about you? You like that little setup Tyler brought up?
I like it. It's interesting. Again, I mean, I'm always seduced by the delta play on that, so that would be an interesting thing. But those premiums way down there out of the money are pretty kind of much a no-brainer. I don't know if they're a no-brainer, but they're attractive. That's for sure.
Great question, Tiago. I don't know what this is. Mark, I might need us to look at this. Look up NKLAW.
It's the warrants.
Oh, warrants. They were great.
It's the warrants of Nikola. And so one of the reasons the option skew is so out of whack and why you can get like some is that the warrants, like you can get that investment and that option to buy Nikola at lower shares. This is like, if you were like, I'm a long-term believer, this would be a better way to go in Nikola. From that perspective, right? Now, different technicals on it, but
what is a warrant, Mark? Tiago's asking. What does that mean?
Oh, like that's a whole different discussion. So I've never traded warrants because it's not what I do. Let me give you an actual definition. A stock warrant represents the right to purchase a company's stock at a specific price and a specific date. What does that sound like? Sounds like an option, right? It's issued directly by the company to the investor. The stock options are purchased when it is believed that the price of the stock will go up or down. And so it's like, think of it as an option. And I can't remember specifically, but because I researched this on Nikola, and I think the warrants give you, and I might be wrong or right on this, the option to buy Nikola at 1250. All right. Which, when you add up the put call spread difference that you see on the regular Nikola, just NKLA, the option, the math all adds up. So I believe the Nikola warrants give you the right to purchase it at 1250. They're trading like options. And so if you want to get a better price on Nikola, that would be the way to go if you were a long-term believer.
Yeah.
And it's hard to be a long-term believer, right? When they haven't made any money yet.
Well,
and I'm not talking about making money, beyond
I'm not sure I'm a believer or not. I'm interested. Yeah. I'm interested in their models. Everybody's interested. This company's in everybody's radar lately. What you just said though, Mark, it reminds me of something we looked at earlier. And I've never asked Tyler this question, but go to the trade tab again here, Noah. And open up, because it's the warrants is interesting. So you can be basically long Nikola through the warrants cheaper than you could NKLA.
Yeah, because the warrant. Think of them like an options with the right to buy at 1250, and so.
Give me a September here, Noah. September's fine. We can do a different month of it, but you also see this, Tyler, through these synthetics. Noah, go long call at 70. Or 75, it doesn't matter. Just do the same one. And then do short put on the same strike price. So buy a synthetic, if we're going to play the option side of it. That one, long call, short put. That doesn't look right.
Sell the call, buy the put.
Buy the call, sell the put.
Buy the call, sell the put.
Yep.
Look at that
magic math.
You get a $30 discount on the equity price.
Which, when you discount that from 71, gives you about 41, where the warrants trading about 38 basically come into alignment there.
Yeah. Well, and one of the takeaways that I have from this is it's not, it's a unique situation, right? So there's a reason why those out of the money puts are trading so juicy. And this is probably this is advanced. All right. So this is speculative. So you got to do a little bit of due diligence to understand what's going on. But yeah, something, I mean, this is not your typical garden variety stock. I've never dealt with warrants, and I don't know what that does to the, I'm kind of in uncharted territory here. So I don't even know what I would disclaim
Well,
on
forget the
this
warrant
other
part of
than
it. Forget the warrants part of it. Even just the synthetic, Tyler. When the synthetic gives you a break even very deep below the current equity price,
yeah, it's not typical.
I mean, that is an anomaly, right? I mean, I'm not
Yeah.
sure it's a red flag or anything like that, but it makes you, scratch your head and say, well, what's going on here?
I mean, let's say you were going to hold Nicola for 2 years and you're like, this is my investment thesis. I'm not saying you should. I would never do it. But let's say you were doing it. Well, the warrants or the synthetic give you a massive discount than if you were to buy the stock. Anyone who buys the stock outright, now if swing trading, whatever, anyone who buys the stock outright from a long-term point of view, like you're throwing away thousands of dollars per hundred of shares. So
it does make you wonder why the underlying would trade at 70 when there's that big of a discount. Is it dumb money? Is it an aberration that will quickly be corrected?
I cannot. Here's my guess. One quick guess. I think it's equity holders who probably can't sell their stake, and so they're pushing premium into the out of the money puts to protect, right? Because this is a new IPO, right? You have a lot of people who can't sell their stocks yet for quite some time. And we saw it with Beyond Meat last year, Mark. Same thing with the synthetic. Over time, I do believe it will normalize, but that's an instinct, Tyler. I can't prove that. I don't know that for certain.
Got it.
Yeah.
Okay. Hey guys, look, all I wanted to do was bring up the dang breakout. You're the ones who took it to left field. I just thought it was a nice breakout. That's all.
It is
that's all I'm
clean.
saying.
It is clean, brother. All right, Noah, you're next. What you got, young man?
Well, I had a couple of candidates off of the watch list this week on the stock report. Number one, I've really been watching that Facebook. So that we had on the options report. On the stock report, we had APPS that triggered and popped up. Zynga's performed well. It's just breaking out. So I like that one. And I'm watching Pizza, PZZA, to see if we can follow through with that breakout.
Love it. Love it. A lot of good charts there. And by the way, Tyler and Noah did both the options and stock report, over the weekend. Noah, I loved your report. Tyler, yours was great as well. But Noah, excellent write-up as well as video on that. If you haven't seen both of them, guys, go back and make sure you review them. A lot of great charts that they break these things down in detail. Marky, final thoughts from you, sir.
I don't know. I'm just focused on dividends right now. Like, I really think 3-6 months down, when the market normalizes, wherever, it might normalize here, might normalize higher, might normalize lower. I don't know. But when it normalizes and price action becomes a little bit normal, man, we know that dividends in a zero yield environment, I mean, I could give you numerous examples from the last 6-7 years. They go on a streak, as when market normalize and, funds are like, hey, where can I get some decent yield? And so, finding companies to add to my portfolio that, I believe in, that are good dividends at prices I like, that's where I'm spending a lot of time, because I think you're going to see that trend, 3, 6, 9 months from now, where dividends become hot again when the market normalizes.
Mm-hmm, mm-hmm. Dividends are obviously an interesting longer-term thesis if you're looking for safety and conservative stuff. In short-term swing trading right now, you and I were discussing this earlier, they're just not grabbing my attention in the short term, but I'll never argue with a dividend player. Somebody like a Greg Holmes or yourself.
Both, bro.
Yeah, I know. It's true. It's true.
You think about it, if I only have 1 or 2 swing trades out at any time, I find a chart, I play it bullish. I don't do any bearish trades these days. That gives me a lot of rest of the time, the rest of the week, right? To research and analyze and think and all kinds of other stuff.
Sure. Yeah, I like it. And there's a lot of great dividend plays out there, by the way. Still, even in this market, you can find good dividend plays if you're looking for them. Last ones from me here, guys, is pretty simple. Back on the market here on like Facebook, any of these big major names. There's a bunch of companies. I just want to see if this tech, breakout holds and how much we can run with the momentum here. It's the cleanest thing in the market today. I wrote about it in the Tackle Today blog this morning. The rotation into tech is not just today, by the way. During the entire month of June, when you measure the relative strength in tech against other sectors, it's the number one sector in the market. Now, I know communications, Noah, XLC is looking great. The XLY are looking great. Those different companies, you still got some pop there if you can get these breakouts or moves here, and they've been good performers. But tech has led the way in my opinion. And some other companies, some charts that were not on the reports over the weekend that grabbed my attention here just midweek. Look at Match.com, MTCH. Marky, one of your old favorites. Plus the round number up at 100. Tyler, momentum play. I mean, I know your range up. Any interest in Match here?
It's pretty. Yeah. I mean, I would have preferred it pulled back 3 or 4 bars and give me the dip, but the fact that it only pulled back 2 before buyers rushed in is a bullish omen for sure. Yeah, it looks good.
Buyers grabbed it up. WW, take a peek here. Added this one to my weekly watch list. I like the little pivot confirmation. Stone, STNE. Like that little breakout running towards a target there. Some bears I'm looking at. I really still love the CME setup, Tyler, that you brought up over the weekend on the options report. If I'm looking for bear delta, and I just personally am a huge true believer, you have to look for bull and you have to look for bear regularly. You cannot just become one, track mind with the market, because I think you end up getting cognitive biases there. This one, I got to tell you guys, if it breaks, there's so much room to the downside, and I'm still looking for that one. Ty, how would you approach this one with options? Set long puts or spreads?
It's $175. I mean, that's puts are going to be a little bit pricey. IV rank is low on this though, so long put or bear put, it would be the simple way.
Both can work.
What month would you use, Tyler?
I wouldn't use July. August is probably your happy medium. I'd probably use August.
I love it. Marky, who's on the coaches show tonight?
We got Mr. Tyler Craig, who just was speaking there, and Mr. Greg Holmes, our Canadian friend. So I believe you guys are going to talk about multiple time frame analysis. One thing that I think is such an invaluable topic, but break it down for us, Tyler.
Yeah, you know what? We're going to talk about multiple time frame analysis. We'll show you how to go through like weekly charts, daily charts, intraday charts, and how to keep order as you go through that and not get all confused.
I love it whenever we get 2 coaches on the coach show that got a good vibe together. You and Greg, Tyler, you got a good flow with each other. I think you're both very laid back, good technicians, different perspective. I'll look forward to it. There's no doubt about it. By the way, Noah, real quick, I'm going to drop the link inside either Slack or Zoom. I'll actually send it to you in Zoom. Last thing I want to do is actually promote our pro subscription. Coaches shows, nightly webinars, weekend reports, all the stuff that we do over at Tackle Trading. If you're a pro member right now and you're still watching our show, thanks for being one. We appreciate you guys. If you ever need anything, let us know. You know that we're a firm believer in our community and Team Tackle. And if you are a pro member, just in the chat up here, just type in pro member. Represent. I think getting the word out, social proof, it really helps people who are maybe watching Tackle Trading for the first time say, hey, you know what? I'm interested in these guys and what they do. And I just dropped it. You can even just go to the website here, Noah, tackletrading.com. That'd be fine. I put it in Zoom as well. Actually, I did. I put it in YouTube. You can grab it from the YouTube chat as well. But simple, Noah, explain it. You've been in trading for nearly 2 decades. You've been around trading education for a long time. You're an owner at Tackle Trading Coach. You've been in this community since the beginning. Why should somebody join the pro membership?
Well, value. It's content, it's information, it's engaging with other traders. It's your weekly scouting reports. It is your coaches show tonight. It is your traders lounge every morning during the market hours. I mean, there's a ton of value in the subscription, and really truly it's a time saver for me, Tim. If I'm not doing the reports, which takes quite a bit of time, by the way, but when you're actually just it's one of those weeks where I'm not on the report and I just want to see what's going on for the market that week, log in, look at those scouting reports every week, and I've got a handful of really nice candidates for my watch list already curated for me. And again, just that content and information, and then just expertise. If you are, I see a lot of people out there, Tim, like particularly recently on social media, like a huge surge and uptick in brand new traders out there who are posting things like, anybody interested in trading XYZ? And it's like, well, if you don't really know, why are you considering it? So it's just one of those things where, consider the cost of ignorance compared to the cost of a subscription. How about that?
I think it's a no-brainer, and it's a real easy thing because, we provide value and we know it. Tyler, what's easier than free trial, right? I mean, if you're not sure and you want to test something out, who doesn't love a free trial to see if it's for you or not for you? And if it's for you guys, we believe it will be, and you're going to stay with us for a long time, and you're going to learn and you're going to grow and become a better trader. If it's not for you, c'est la vie, no skin off your back. Just let us know and we can help you out in whatever way we can. Guys, join Pro today if you have not
You're
yet.
gonna notice if you take the free trial, you're going to realize that there's more content available to our Pro members than you can even consume in 2 weeks.
No doubt.
If you spent 5 hours a day trying to consume all the stuff that's available to the Pro members, you won't get through in 2 weeks.
Well, and forget even going through the archives or the courses that come with Pro membership.
Oh,
or
trying
even
to
the
consume how
playbook.
much is on there.
Yep.
Yeah, I've had students that are like, oh, wow, I didn't even know this was here. Oh, I didn't see that. I was like, man, there's so much on this website. It's like, yeah, there really is. This is built around education with trading.
No, I think one of the things that separates us from other people, we don't say, go do this. We want you, it's the whole teach a man to fish. You feed him for a lifetime, give a man a fish, you feed him for a day type thing. We really want you to have the knowledge, that you could do a show like this and share your analysis. That's how we all started. None of us are born knowing technical analysis or how to analyze a stock. It is a skill that you can learn so that you are set up for life, that you can be a successful trader with life.
100%. Because if all we do is tell people what to do in the short term, Tyler, but they don't learn how to manage entry, position size, we're doing them a disservice. Trading education takes time. You guys have all been in this business for 15 years. And I can tell you from my own personal point of view, I've learned stuff this year that I never had to deal with before. The volatility in March was crazy, right? You never stop learning. You never stop adjusting. You have to constantly be around people that build you and challenge you and all of those kind of things. And by the way, when that face right there came up, Coach Emily, last thought, Emily did send me, I don't know if you guys have a fear of these things like I do. She sent me a robot because I have a deep fear of robots. She thought it was a funny joke. It was made for kids 4 years old and up. And I'm thinking about running it over with my truck tire, Tyler. I don't artificial intelligence things in my office. But Emily, very much thank you. I saw you there on the 15-day trial video, made me think about that. I appreciate the gesture. I know you're just messing with me, but whatever, I'll get you back. Guys, that's our show today. A lot of fun. Tyler, rock it out in the coaches show tonight. Go check out the blog, get the podcast. We got tons of content. And if you're just here on our YouTube channel, we'll be back tomorrow. Subscribe, click the bell, join us every day. Great job, everybody, today. We are out.